Hey everyone! If you've been watching the market closely, you might have noticed something interesting happening with BigBear.ai Inc. On April 15th, 2026, the stock listed under NYSE. BBAI made a notable move, climbing over 8.5% in a single session. Now, at first glance, that kind of jump might look like just another short-term spike, but when you dig deeper, there's actually a much bigger story unfolding here. Let's break it down in a way that actually makes sense, especially if you're trying to understand whether this is just hype or something more meaningful. BigBear.ai sits in a very interesting position right now. It's one of those companies that clearly has massive upside potential, but at the same time, it comes with serious risk. In simple terms, it's a classic high-risk, high-reward setup. The company is heavily focused on artificial intelligence solutions for defense and government sectors, which is a space that's expected to grow significantly in the coming years. But here's the reality check. The financials are still rough. Over the past year, the company generated around $127 million in revenue. That sounds decent for a growing AI company, but the real issue lies in profitability. The company is still operating deep in the negative. Its EBIT margin is sitting somewhere around negative 230%, and its profit margin is even worse, dropping below negative 200%. What this basically means is that the company is spending far more money than it's bringing in. And that's not necessarily unusual for a company trying to establish itself in a competitive high-tech industry. BigBear.ai is investing aggressively, whether it's building technology, securing contracts, or scaling operations. But for investors and traders, it raises one big question. How long can this continue before profitability becomes a real concern? Now, let's look at the balance sheet because this is where things become a bit more stable. The company currently holds close to $900 million in total assets, while its liabilities are around $280 million. Long-term debt sits just under $100 million, which is relatively manageable. More importantly, BigBear.ai has nearly $290 million in cash and short-term investments. That gives it breathing room. It's not struggling to survive in the short term, and its current ratio above 1.7 suggests it can comfortably handle near-term obligations. However, the valuation tells another story. With a price-to-sales ratio around 12.5 and a price-to-book ratio near 2.6, the market is clearly pricing in future growth, not current performance. Investors are essentially betting on what this company could become, not what it is today. Now let's talk about the chart, because price action often reveals what the market is really thinking. Over the past few weeks, the stock has moved steadily upward from around $3.14 in late March to nearly $3.80 by mid-April. What's important here is the way it moved. This wasn't a sudden, explosive spike followed by a crash. Instead, it was a controlled, gradual climb. That kind of price behavior usually attracts more disciplined traders, especially those looking for breakout setups or pullback entries. Even on April 15th, the intraday movement stayed within a relatively tight range, roughly between $3.55 and $3.83. That kind of structure often signals strength rather than instability. But here's where things get even more interesting. The recent momentum in the stock isn't being driven by a huge contract announcement or a surprising earnings report. Instead, it's tied to something that might seem minor at first, but actually carries long-term importance. BigBear.ai has been quietly strengthening its leadership team. The company recently appointed Joanne Bjornson as Chief Human Resources Officer and Alex Thompson as Chief Corporate Affairs Officer. Now, these roles don't directly generate revenue, so they often get overlooked. But in reality, they play a critical role in scaling a company, especially one operating in defense and government sectors. Think about it. To succeed in this space, you need highly skilled engineers, security-cleared professionals, and a strong internal culture that can support rapid growth. That's where a strong HR leader becomes essential. At the same time, communicating effectively with government clients, partners, and stakeholders requires a clear and strategic message. That's where corporate affairs comes in. And here's the key detail: both of these individuals come from strong backgrounds in defense, technology, and communications. This isn't random hiring. It's a signal. It suggests that BigBear.ai is preparing for its next phase, a phase where execution becomes even more critical, a phase where the company is likely aiming for larger contracts, more visibility, and greater scrutiny from both the market and government partners. When you combine that with the recent price movement, it starts to paint a clearer picture. The stock isn't just moving randomly, it's gradually building momentum while the company strengthens its internal structure. And for experienced traders, that combination often indicates something bigger may be developing beneath the surface. So the real question becomes, are we looking at the early stages of a larger breakout, or just another temporary run in a volatile stock? That's something only time will confirm. But one thing is clear, BigBear.ai is no longer just a small, speculative AI play. It's positioning itself to compete in a much bigger arena, and the market is starting to pay attention. This is not finance advice.